Hi, folks. Welcome to episode 2 of FinMet Mondays. Thank you so much for joining us again. Sunil, great to have you back as always. Gold started on probably a very bullish note on Monday, somewhere around the 1756 levels, and closed way higher, about 1800 levels, following the correction from the jobs report. What happened the entire week? Because we did not really expect that the metal would pick up so quickly.
Good morning, Sean. It was certainly an interesting week. I think a lot of people were surprised by the way there was a knee-jerk movement upwards when we were looking at probably sideways movements last week. I think the big change probably was the change in tone from the Fed, which led a lot of people to reposition their view on gold. There were a lot of people who were short, who were sitting with short positions, expecting gold to go back below 1700, and then they reversed their positions as there was short covering, and that made the gold price go higher.
Would you agree that by itself, gold, there are not much reasons for investors to be very positive about gold or to be able to make more upside moves, right? Right now we are at 1812. Do you think it has the possibility to go even higher by itself without the short covering aspect coming in?
I think short covering was the reason we saw the move up. We will have to see how things pan out in the coming weeks. As you know, I am bullish on gold. I think what I see in the physical markets is demand is very strong. So there is a strong underpinning. Also, the cost of production has been going up steadily. So I think there are fundamental reasons why gold should not, just go much lower and should form a base here and move up. But I think the immediate move was definitely because of short covering. And in the coming weeks, probably what you're going to see is more of a sideways movement as we get into the Christmas season and generally traders go out of the market.
The Fed's official statement was that we can expect monetary policy to be restrictive, but definitely not as aggressive as it was going to be. And I know you already said that you expect that to be a little bit more sideways trading action for gold. But what after that, Sunil? Do you think, let's say in Jan Feb, how much is this restrictive monetary policy still going to hurt gold's upside?
It's really going to depend upon the pace. If it remains uh, as per the plan, where there's a slow amount of monetary tightening, then I think you're going to find a situation where gold will just absorb that and it'll um, remain on a strong wicket. I think if you have a sudden tightening, you're going to bring about recession, and that's going to have its knock-on impact in terms of the gold price also.
Recession or not, I think the trend for gold is definitely upwards, and especially for this week, my view is that the 1800 region is going to be a very strong point of a support for the metal, given that it's already bounced back on Friday from this region. So it'll be interesting to see how that plays out. Well, thanks, Sunil. Thank you so much for joining, and see you next Monday.
Thank you.